Hi, it's Carl Allen. In this playlist, I'm going to be doing some deal reviews for you. So part of my Dealmaker Protege program, we review our Dealmaker student deals on a weekly basis. They're anonymized. We put them on a Zoom call. We break the numbers down. We look at the growth opportunity, valuation, what a deal structure might look like, interpreting the seller psychology and how that maps in to a desired outcome in terms of a deal structure. We'll then also look at what the exit options might be for you as a new business owner after you've grown the business and you want to go to market and liquidate the asset. So every single week we review a bunch of these deals, and my favorite deal of the week we're actually going to showcase for you on this channel. So absolutely check these out, and don't forget to like and share these videos, and definitely hit the subscribe button so that you're getting these deal reviews as soon as we release them. So enjoy the video, and I will see you soon. Until then, bye for now.
Okay, let's go to the disclaimer to start things off. Yeah, if you're brand new to this call, you need to understand what this call is all about. And so this call isn't really about advice. So I want to point that out. We're not providing advice to any specific individual who's working on any specific acquisition. The purpose of this call is to observe how experienced deal makers look at new opportunities, the questions they form, and the strategies they might potentially pursue. If we were going to be in a position to develop an actionable acquisition plan, which of course we do all the time, would require a lot more in-depth information on both the target companies and the sellers than we're possibly able to review on these kind of short 20-25 minute sessions, which is about how much time we spend on each deal. So we're gonna have lots of good discussion, lots of ideas thrown around, lots of opinions, and none of it is going to rise to the level of actual advice. So important to keep that in mind. We'll get the simple model down here, ready to go, with a slight pause at the top. And then I like to put the bottom on there so people can see what both the balance sheet and the income statement looks like. Yeah, this is a pretty interesting deal. This is Charles's deal, Charles Whitmore. This is a UK deal. What's it all about? This business is about microphones and accessories. What is the focus of the business? Yeah, this is important because sometimes if I don't emphasize this, people will get the wrong idea. These people are manufacturers. They design, they develop, they manufacture, and they distribute microphones and accessories. So who's the customer profile? Well, it's used for podcasting, gaming, streaming, and video calls. There's a little bit more of a breakdown that I'm going to get to, a few bullets down. The market segments that they're targeting: professional musicians and audio engineers, that's on the high end. Podcasters are on the low end. And this is an important distinction, and it does play a pretty big role in this deal. Customer breakdown: distributors, they've got 40 of them. Retailers, they sell to 13 retailers. They do have direct to consumer. It's a work in progress. I couldn't get a sense from either the notes, the sim, or their website exactly how far along they are in that particular enterprise. So maybe when Charles gets on, he can fill us a little bit on that one. This is located in the UK. This business is 20 years old. It was founded in 2002. The trading area is international, and in this case, it really is international. They have an actual sales channel in 65 different countries. Now, their main market is North America, Europe, and Australasia. They literally are worldwide. The business has been for sale 6 months officially, but unofficially, judging by their SIM, their confidential information memorandum, it seems like that SIM might have been released sometime in 2021. So I'm assuming this business has been for sale off and on, maybe for a couple of years. No ask price was given. Offers are invited. No property involved in this sale. The ownership story: this is owned by a husband and wife team, both 50% owners. Both are around 50 years old, so this is not really a retirement sale. These aren't baby boomers. Darren is a high-end subject matter expert. I think that's a key part of this deal, right? This guy has deep expertise in acoustics engineering. And, this business is broken down into both high-end and low-end. I think Darren's, real passion is on the high-end. He has world-famous pop stars using his high-end microphones. They've had very good penetration with that high-end, but the bread and butter is on the lower end and the podcast. I mean, how many people here have bought a microphone, that cost more than $100 or $200 over the last couple of years? I'll bet you a ton of hands would go up. So they recognize that. They're trying to work that out. And it's caused them to be a little busier than they want. Now, Carol also has a passion. That's Darren's wife, for high quality recording equipment. She works in the sales and marketing side of the business. They're both working full time, and both are overwhelmed by the day-to-day demands of this business. So the motivation for the sale was really stated as twofold. Number one, burnout from the COVID-inspired rush of 2021. A ton of people were buying high-end microphones in 2021, working from home, starting up podcasts, starting up streaming, you name it. A lot of gaming going on, all of which require a microphone, right? And then the other motivation is that they really recognize that a more business-oriented owner is needed to reach the next level of this business. They're audiophiles. Darren is an acoustics guy. He's a music guy. He's a microphone guy. I don't think he necessarily identifies as somebody who could build build this business out. And there's a lot of players in here, like Rody down in Australia. That was, kind of probably started the same way this business did. And obviously they are business people, because that business has just absolutely skyrocketed over the last 5 years. And I think, Darren's the kind of guy that figures his business should be doing the same, but maybe he's not the right guy in the right seat. And for that reason, right, he's prepared to exit the business. Now, important decisions are made jointly. So any sale of the business would require the full agreement from both Darren and Carol. It's going to be a joint thing. The future plans for the owners, including spending time on their fishing boat, a little bit of R&R, but they also want to launch an education product related to audio engineering. I don't have any more information than that on it. I was curious myself. I did do some digging, but I didn't come up with what kind of education product that would be, what it would look like, who they would target, etc. But that is one of the things they want to do with their time once they're out. I mean, the sellers are obviously critical to this business, but they do claim pretty strong technical bench strength as well. So Darren is not the only technical expert in this business. And the staffing, 5 full-time, 1 part-time, 2 R&D subcontractors, 4 freelancers, plus the 2 shareholders, Darren and Carol, 14 people in total. And the fastest growing part of the business, obvious, it's podcasting equipment. Now, they sell product through a combination of trade shows, direct selling to distributors, and social media promotion. Yeah, that's what the note said. I'm not sure that they're actually selling through social media promotion, so maybe I should have said sales and marketing is through a combination of. The main focus is professional equipment, I think, for Darren. I didn't get a breakdown on a revenue basis of what professional high-end was versus the low-end podcasting market. I don't know if it's 90-10 or 10-90. That wasn't provided. Obviously, it would be a really interesting number to know. But in the high-end, they do have a very strong reputation. And of course, as noted, lack marketing and distribution sort of channels to penetrate the lower end of the podcasting market. That's a whole other kettle of fish. Legacy, as you can imagine, is extremely important to both Darren and Carol. They're very proud of the reputation they've built as high-end suppliers of audio equipment. They don't want a new buyer coming in that's going to destroy that legacy. I mean, the biggest opportunity that was identified, and I think the channel agrees with them, is to create separate channels. So they do have a specific high-end, equipment group with its own channel, its own salespeople, its own marketing, etc. And then, kind of going whole hog on the lower end, direct-to-consumer podcasting equipment through Amazon, etc. I mean, they are on Amazon, but they're not really putting much push and much muscle behind it. Their website is primitive and non-transactional. That was Charles' opinion. I agree with him. They just haven't had the time available to really invest in improving their online business, including their Amazon business. They're only operating at 60% of capacity. Now, the reviews are definitely 5 stars for professional equipment. This was kind of a nice deal on that side of things. All kinds of places where you could go and take a look at the reviews of both sides of the business, the high end and the low end. And their podcasting equipment is just fine. It's priced right. People like it. 4.5 stars. But I think where Darren really shines is on the high end. The website is pretty badly in need of an upgrade, as was already noted. So there's a big opportunity there. I would say the mud score is only average. I mean, Darren and Carol are 50. Yeah, they're burnt out. They had a really good 2021 year because of COVID. In this deal, it would be really nice to take a look at what the 2020 and 2019 numbers were, just to give you a little bit of an insight on the years. I just noticed that I forgot to actually change this over here. This should be 2023, 2022, and 2021 as well. But the fiscal year end is March 31. So their 2022 fiscal year end is already over. They're halfway through their 2023 year. And so the 2023 number is a projection based upon 7 months of results. And as you can see, the business is tailing off pretty significantly. So the mud score is only average. I mean, I think the motivation is high. Obviously, the business kind of seems like it's a little bit on the rope. They are burnt out. But I didn't really get any distress or urgency. Distress in terms of concrete reasons that they have to sell, whether it's family breakdown, illness, moving, or whatever it happens to be. And I didn't get a sense of a really strong sense of urgency either. But, the motivation maybe puts us a little higher mud score than average. In terms of the rest of it, the RELV or whatever, whatever we want to sort of rename that, it would be nice to have some information on that. I didn't get a sense from the information submitted that I could come up with an approximation of what that might be. Maybe Charles can fill us in a little bit more on that. So a pretty interesting business. It's kind of a bit of a guru business, at least in my opinion it is. But of course, I'd love to get Carl's take on it as well. Carl, what do you think of this deal?
Yeah, so some good things and bad things about this deal. It's in a really cool growing market. I think, over the last few years, the whole kind of podcasting, social media, infomercial market has really kind of blown up. It's like a $6 billion market right now. Which doesn't sound that high, but most of the businesses that play in this market are going to be micro businesses like this. Amazon's a massive growth opportunity for a business like this. I could 10x this business in a year, like with my eyes closed. deals. This is such an easy business to kind of grow. And that idea of, they want to go off and an educational product around, how to get the right stuff, the right tech, and how to set it all up. That's an amazing idea. That was one of my ideas also to kind of grow this. You could have an info product business alongside this. So potentially you could partner with the retiring sellers, for that. Obviously, the margins are pretty good, although they've dipped from like 36 down to 28%. The biggest problem with this deal is it's like dying. It's gone from $1 million and change in revenue. It's lost 55% of its sales revenue in the last 2 years.
Well, I think 2021 though was a super banner year driven by COVID. I think it's more in line with what it would have been in 2019, 2020. So 2021 is not a good baseline year. This is why they want to sell the business. They got run ragged in 2021.
Right. Okay. But like 22 was 884. 2023, they're forecasting like $500,000. So like that's crazy.
Yep.
So for a business like this to be declining, there's either something wrong with the business, there's something wrong with the sellers. So I think the mud score might be a little bit higher potentially. But again, I've not first time I've ever looked at this business.
One other thing keep in mind when you're analyzing this is Charles does have some expertise in this area. This isn't.
I know.
This is definitely in his lane.
Yeah, I know. So I think this is a great deal for Charles. And I think one of the best things about this deal is just how fundable it is. So this is one of those deals. It's quite rare we see this. It's earnings poor and asset rich. So like you wouldn't do a 3-year average really on these numbers when they're declining. So if it's doing $137,000 of EBITDA, at most it's worth 3 times. So the business is only worth about $500,000. Yet there's about $750,000 of surplus cash in this business. So you wouldn't need £100,000. It's UK, isn't it? You wouldn't need more than £100,000 in the bank to properly trade this business. So especially if you scale it through Amazon, you probably need even less working capital. So like, I think you need to do a deal somewhere around the level of the owner's equity. So like if you turn around and said, hey, I'll give you £500,000 this business, they're not going to sell it to you because they could shut it down, liquidate the balance sheet and walk away with probably not 1.374 million, but probably $1 million and change. So what I would do is the sort of deal I would do with this is I'd go as high as £1.5 million for this business. I'd give them £750,000 at closing, which is all the surplus cash, right? And then I'd do a 10-year annuity on say 75,000 a year. And then literally Charles, within hours of doing the deal, get this thing on Amazon, figure out your supply chain for the impending growth. And then I would absolutely scale the nuts out of this. I think you could massively grow this business over a couple of years and then sell it. So I think this is a flip deal. I don't think you'd be in this deal more than a couple of years. For me, I'd be in and out within 12 months, probably. I think you can do this deal without going near any external financing. I think, John, this is a deal like the cybersecurity business you and I bought in London. When was that? 2019, just before COVID. It was basically surplus cash as a closing payment plus a seller note. We didn't need to go through any other funding channels. And I'm getting a sense from, if you look at the financial trends and, from what we're talking about with the sellers, obviously Charles fills in a bit more. I think there's probably a good sense of doing that. I know it's in Charles's lane. I'm a little bit concerned about the decline in revenues, but yeah, I think that's more their desire than anything else. This is a growing market. So you might want to do a little bit of due diligence just to make sure there's nothing fundamentally rotten about the company. But I think this is an interesting deal, and I think it's very fundable without any external financing.
Before we get to Charles, I want to ask you something, Carl. We don't see this very often because we don't get those kinds of deals in red light, green light all that often. But I think this business has some real brand equity. If you take a look like I did, obviously I have an advantage because I spent a couple hours on this deal yesterday. And you take a look at what the professional reviews are, the name recognition, where it's written up, et cetera, et cetera, et cetera. It's a small company, but it's got a recognizable brand name that has a lot of cachet associated with it, especially at the high end. Like I'm thinking, this brand alone might be worth $1.5 million or £1.5 million in this case.
Yeah, absolutely. And I think, you can always play on that as you scale. Like a lot of the people out there that buy these products probably don't know that it's only doing £500,000 a year in turnover. They probably think it's a 10, 20, 30 million pound business. So I think if it's got a really solid brand, it's cash rich, it's an easy deal structure to fund. fund. There's massive upside in this business. It's in Charles's lane. I think this would be a low green light deal for me anyway. I would buy this business for sure. But I think for Charles, it's probably a higher green light deal. I am concerned about the decline, but...
Yeah, I guess in my mind, I think the podcasting microphone market is absolutely on fire, and I don't see that ending anytime soon. And you've got somebody with some real cachet on the high end of the spectrum, and you've got a ton of positive reviews all over the internet. Those two things together, for me, make this a solid green light.
Yeah, absolutely agree with that 100%.
Now, I haven't checked to see if Charles is here. There's his smiling face right there.
Yeah, he is. Mr. Whitmore's there.
Charles, thanks for submitting this deal. Very interesting. I know this is probably a deal you were looking at maybe a month ago because of the length of the queue. Sometimes the red light, green light isn't all that timely. Are you still in the process of discussing things with the seller, Charles?
I've got an offer in with them, and it's pretty much along the lines of what Carl's just outlined. It taught me well.
I'm good at this shit, aren't I? No, I'm just kidding. No, Charles, you've seen enough of these red light, green light calls. You know exactly how to structure this deal. It's perfect. It's perfect.
So there's a couple of points. The one is this 23 forecast. They have acknowledged there's some seasonality to the business, and we've basically just extrapolated the turnover for this year. They've got a Christmas spike, so it should be a bit
I
better.
should have mentioned that, Charles. You're 100% right on that. Yeah, I should have mentioned that.
Okay, the other thing is, as far as RLEV goes, I've got a great relationship with these people. I took them for lunch. They really like my passion and what I want to do with their brand. They're passionate about their legacy because they've obviously spent 20 years building up brand. They are very, very caring about their employees. The owner, Nitty, started crying when he was talking about the one guy on the workshop floor that he'd employed since he left high school early, etc. And then as far as values go, one of my key values is integrity, and it's their top value. We've got a high RLEV score there. I think the only other point for me to make is I've done some work with Amazon before, and I know they're not your friend. If you're trying to sell stuff that other guys are selling as well, there's a price war that comes on, and almost like not worth the effort. So I've actually been looking for companies that have got their own brand, which Amazon can't go and cannibalize and destroy with price competition. And I think I found it, yeah.
Now, Mike's made a point that I want to kind of build on here. Talking about Shure, of course, Shure is a great brand in microphones based in Chicago, used to be market leader in high end, got out 20 years ago because they could not compete against China. Yeah, that might be true, but still, the reputation in the high end is still value, whether you're making $1 in there or not, right? It's a great sort of proof of concept. It's a great social sort of proof that you've got what it takes to build a great microphone. So I wouldn't necessarily be getting out of that. I just wouldn't be trying to make any money in it necessarily. Thoughts on that comment, Charles?
So what I don't appreciate, I'm an electronics engineer, right? So I've always thought that microphones are about the electronics. But what I learned from this guy is that it's about the physical acoustics around the pickup, the weight of the microphone handle, the acoustic shape that the sound waves flow in with, and that's not something that China's very good at competing with. And they've obviously got a high-end microphones that sell for over £2,000 per microphone, and the pros are prepared to pay that because they can hear the difference.
Yeah, the pros aren't going to buy from China. I think these guys are playing in a different part of the market, and just been looking at some of the comments. A lot of people, it was a kind of thought of mine initially till I realized it was Charles's deal. Like, who's going to run this if they leave? This is Charles's wheelhouse. Charles, you can get in there a couple of months, figure out what's going on, put a GM in even to help you do the day-to-day. I think strategically you can move the needle on this very quickly, very impressively. I just think it's got all the great attributes, and I think those declining numbers based on that seasonality comment, it's probably not as big a deal as we originally thought. The beauty of this deal is just how easy it is to finance it. What's really interesting about the UK, everybody, is in the UK we have a very interesting tax situation when you're selling businesses. So in the UK, most businesses exist as C corps in America, so they're taxed at the company level profits, and then owners get taxed when they pull the money out. Right, so it's not very efficient, but where we make up for that is in England. If you sell the shares of a company, the first £1 million of your money, so about $1.2 million, you only have to pay 10% tax, right? So these guys, if they get 750 at closing, they'll pay £75,000 in tax. And if you do the deal now, they won't pay that tax, Charles, until the 31st of January 2024. So they could take the closing payment investment, invest it, and if it grows 10% in that year, they're covering their own tax. So yeah, I think that's another factor in here. They'll end up paying very, very little tax in this deal as well. So most of the money they get's gonna stay with them.
Okay, let's put it to a vote. Well, hang on a sec. Let me touch on a couple people. Lightning round, folks. We don't have much time. Can't give you any more than 30 seconds, but I'm going to start with Garland. I'd love to get his take on this. Garland, can you unmute? Give me a red, give me a green, give me a number, and give me a Y.
So unfortunately, I was on a call for the first 10 minutes or so I only got the last 20 minutes. But I think from what I heard, I think it's still a very good deal for Charles because he seems to understand the technology behind it. I do think that if you have something that is underpinned by a strong brand, usually there should be a way to make money out of it. But I'll caveat that with that I haven't kind of listened for the first 15 minutes. So apologies for that.
Fair enough. Thank you for that, Garland. Hey, listen, I'm going to call on the person who's got a kick-ass mic right in my camera view here. David,
look at that.
That's
David,
a pretty nice looking mic you got right there.
Look at him. He's got like $1 million mic.
David, before you give us your red light, your green light, and your number, what kind of microphone is that?
This is actually a Rode professional microphone.
Cool.
So
I got a Rode.
This is actually
I got my Rode.
this one is an SM7B.
Oh, okay.
Sure.
Wow.
So it's a Shure.
Yes, but I have another Rotary upstairs. But this was square in my wheelhouse. I gave this a green light 95. One being the brand equity that was apparent, that tremendous amount of cash in the business, and the fact that the growth opportunity with the lack of a website, that's for me, that's a huge upside. Those are my kind of strengths. So I was itching, listening to this was a great opportunity, I thought.
Yeah, the amount of blue sky in this deal, I think, is far, far superior than 98% of the red light, green light deals that we see. I mean, I'm not saying it's a sure thing. Pardon the pun on the word sure, but there is a ton of upside on this. Okay, I would love to talk about this more, but I love Mitch. Mitch is in here guessing what the brand might be. No, Mitch, that's a miss. But we don't encourage guessing on this call either. But he did it privately, so no harm done. But no, you did not get the right vendor. So are all the Carl? What did you put in here? You're muted.
Sorry, I was green light 40 for me, green light 80 for Charles.
Yeah, I'm right there too, right around green light 33. That's a great deal, Charles. I'd love to get a progress report on that. It seems very, very doable.
Hey,
okay,
Eldon's a microphone geek. He said, if you pair an SM7B with a Triton FET head to provide about 20 decibels of clean gain, it's pretty hard to beat for podcasts. Now we're talking. Like,
You are correct, sir.
the whole idea was
what the
to
hell? They're so cool.
I thought you didn't need preamp with that microphone.
I don't know. I don't care. It's a fundable deal. It's good enough for me. I don't care how many decibels it produces. You can scale the nuts out of this thing, and you can fund it all day long. Like, go buy it.
Ilona's a tough sale. She's still red lighting it.
Oh, is she? Okay.
Yeah. There's a few red lights in there, but yeah, all in all,
Yeah, fair enough.
I like the deal.
So I hope you enjoyed that deal review. Definitely subscribe to this channel. Also hit like and share so that you're getting the very best content from me in real time. Every time I want to announce my deal of the week, I want you to see it so that you can understand it. And what's interesting is the more of these deal reviews that you go through, you'll start to see the patterns. You'll start to see how seller psychology and valuation and deal structure all kind of combine. You'll start to see common patterns when we look at the financial analysis. You'll start to see common patterns in kind of red flags and what the growth and exit opportunities might be if you bought a business like this and you took it forward into the marketplace. So definitely keep watching these, and I will see you soon for the next deal review. Until then, bye for now. Hey guys, I'm Carl Allen. I'm the founder of Dealmaker Wealth Society. I've done tens of billions of dollars of deals over the last 30 plus years. If you're new to my channel, definitely hit like and subscribe so that you can get all of my amazing Dealmaker content in real time. You're not going to miss any of the outstanding information that I'm going to share with you. And if there's a question that you've got, if there's something that you want to know the answer for and you want me to speak to it, definitely hit me up in the comment section and I will record those videos for you and I will get them on this channel as soon as possible. So love having you part of this YouTube community and I can't wait to serve you. Until then, bye-bye for now.